Welcome to the Smart Property Investment Show. In this episode, we're joined by guest Julian Lancey, an everyday investor who gives us an insight into what it takes to manage his 5-property portfolio, including the handyman skills he's picked up along the way. We hear about his strategy for dealing with future rate increases and changes negative gearing. You'll also see why he's investing in tiny 17 square metre studios and killing it as a result. All this and more in this episode of the Smart Property Investment Show. Hello everyone, welcome to the Smart Property Investment Show. My name is Philip Tarrant, the host of Smart Property Investment Show. I'm the editor of Smart Property Investment, also a property investor, amongst many other things. Today I've got 3 special guests actually. I've got my colleague, Russell Stevenson, who heads up our wealth titles here at Sterling Publishing. I also have Julian Lancey here, also known as MC Anzac, and he's brought his little daughter along, Isabella, who's only 6 months old. So if you hear some squealing and some laughter in the background, you know what it's all about. It's not Russell.
Good one.
Welcome, guys. Thanks for coming along.
No worries, Phil. Good to be here.
Thanks, mate. Thanks for inviting us.
Now, we spoke to MC Anzac about 3 years ago, Russell.
2.5 years ago.
Two and a half years ago.
We profiled him in the magazine.
And at that point in time, he had a couple of properties, and we'll go through that. Now he's got 6 on the bubble. Now, I've asked him to come in because we like to bring real-life investors onto the Smart Property Investment Show. There's a lot of very talented commentators and market analysts, and we get them on the show as well, and they add a lot of value in terms of the interpretation of where the market's going and how it's going. But what we really like to do on the SPI show is to speak to investors and understand their journey. So MC, I'm going to shorten your name just to MC.
Thanks. Yeah, that's great.
He's come in. Now, I think he's hip-hop MC, is that right?
Yeah. Well, it comes from Master of Ceremonies.
Yeah.
So I should be okay with this mic. I'm hoping little Isabella here is okay too. She's slobbering on her hand and she looks happy.
So you've put the mic down these days and you're not in front of people. You're not. I don't even know any slang terms for
rapping.
I could try and sound like I know. I'm throwing in some hand gestures here.
Like it's hot, or
just to Isabella to get us to sleep at night.
So you got MC like nursery rhymes, isn't you?
Yeah. Hip hop nursery rhymes.
So right. What are you doing now? Tell us about just what's your life.
Since the last article, I'm still a teacher, and I've got married, and I've got a little baby, and here she is, Isabella. She's 6 months old, and still an active, well, I guess I'd say not active, I'm an, addict when it comes to reading property articles and, newspapers, online, listening to these podcasts. And I actually had to, delete domain and real estate apps off my phone because it's just, I can't stop looking at them. It's a bit of an addiction.
Smart Property Show on there, then
yeah,
that's fine. That's all you need.
That's there, mate. No worries.
So tell us about your property portfolio.
I got 6 since last times. The last time I interviewed you guys, I had 4. I had a little one-bedder, still got it, in Queenscliff, and then I bought a couple of very small studios in the city. And the reason why I bought those 2 studios was basically because I didn't have a high income, so I couldn't, I didn't have a high approval. So it's not rocket science. So all I could get was something that's not expensive. So I thought,
So when you got your first property, what was your main source of income at the time?
I was actually a real estate agent.
Oh, right, okay.
Yeah, I was a real estate agent.
So you went to university though and did a teaching degree?
I actually did business degree.
Okay.
And then I went overseas and partied for a few years and came back and became a real estate agent. I got my license. And I think that's given me a real, I guess you'd say, background or underground insight to the real estate world. What agents want, their side of things. So that's why I'm, being quite critical on agents in my, in my views. I know that you ask, what's a typical real estate agent like, and people say, oh, well, they're like used car salesmen. I've been to know that they're much worse sometimes. There
are some very good agents around, though.
There are. But
so 6 properties. You got the original studio. You bought 2 more in the city, just so.
Yeah, 2 little ones
studios.
In the city. Yep. Just tiny little studios. The smallest one there is just 17 metres squared.
Okay.
Which is pretty much the smallest one in Sydney.
Yeah, right.
Melbourne has smaller ones that are 13 metres squared, and it's tiny.
So with your properties, where are they based? Are they predominantly in Sydney?
Yeah, they're all in Sydney.
Oh, they're all in Sydney, okay.
Then I got one in Balgala, which is Manly area again. And then...
Is that a unit, a house?
It's a unit.
Yep.
It's a 2-bed unit. And then decided to go, out west. And I got one out west in a suburb called Balcombe Hills,
Okay.
the Hills area, mainly because I'd heard of this, the Northwest Rail Link that is this, amazing.
Have you been out there and checked out the infrastructure going on?
It's
mad.
phenomenal. And I've read too that this thing is the biggest thing that they have built since the Harbour Bridge in Sydney. It's just, I don't know the zeros that, they've spent on this, but it's just phenomenal. Like this rail link that's all underground, well, most of it's all underground, and they're going all the way from there, all the way, and I hear they're going under the ground and to Barangaroo, and from there on, I don't even know, but, these, trains that are driverless, and so I wanted to be in on that. So we got in into the hills. We bought one there, and it's all about, I guess, value for money. What you get on the beaches, and what you get on the hills, for example, or what you get on the northern beaches or city, and what you get out west. You just get more bang for your buck. You get another bedroom and another car spot.
Obviously, all 6 being in Sydney, is that because you know the area, you're comfortable and you're confident with what's going on in Sydney, or you feel Sydney is the place to invest across Australia over the past sort of how many years you've been investing? Or?
I think it's both. And it also comes down to, as well, I manage all my own properties. I'm not interested in giving my properties to a property manager, because, as I said, I've worked in real estate, and I've just seen that I believe, and I know a lot of people that love this Smart Property Show won't agree, but the best way to look after your assets is for you to do it, not to get an agent to do it. So if you're capable of doing that, physically capable and smart enough, and have the time and have the skills, then you should.
Oh, I think that makes a lot of sense. A lot of people choose to get a property manager to look after their properties because they either don't have the time, the skills, the smarts, or just couldn't be bothered to get a phone call at whenever in the morning and say my roof's falling in. So if you've got the bandwidth to be able to do it yourself, and you enjoy doing it yourself, and you get a lot of drive out of it, and you're going to save, I don't know, between 5 and X% on your management. That's more money in your back pocket. So
that's true.
People that want to manage themselves, go and do it. It's
how do you find that is balancing all that as well then?
Oh.
Look, with 6 properties and obviously managing all of those, it's going to be time consuming, but how do you balance that with a day job?
Well, you're right, it is. It feels like a job. Like some people say to me, like, I'm a teacher now, and they say, do you want to get back into real estate, like be a real estate agent? And I feel I am one. I'm constantly, all my places are furnished as well. I'm constantly making sure that they're okay. Every year I've got new tenants to put in or something to fix, or I'm proactive. If I think, for example, my little place, it's in, they call it Potts Point. I've got a bit of baby brain being up all night, mate. Not Pitts Point.
Pitts Point.
Potts Point. It's really King's Cross, and I had a feeling that the toilet was going to die. So I called my mate, who's a plumber. I said, look, let's see if we can change this toilet. He couldn't do it, so I did it myself. I got onto YouTube and found out how to change a toilet.
I mean, and the savings must be huge in terms of getting a trade out there. But as you say, look, it's changing your own toilet. That's one thing to do, but
it's not that hard. Anything that you put your mind to, and that's what it comes back to. Like, when people buy a property, that usually is one of the most important. It's one of the biggest investments in their life. And why would you get someone else to look after your property?
Just to stay on why property for you?
My dad was always into property. He was a real estate agent. And, can you hear that, Isabella? Maybe I think she just said she wants to be in property. Like it was always property in my family. I became a real estate agent, and I saw how people could buy a property and sell it quite easily later
Yeah.
and earn a lot of money. And I just, what are the ways, I'm asking you guys now, of earning money in life? Property is one of it, investing in property. There's other ways too, like buying shares, and who would ever want to do that, including Isabella crying here, and starting your business. Like, it seems that property is the number one, the best way and the safest way to earn money.
I think it's probably the easiest that most people understand as well.
Yeah.
Back down to bricks and mortar as well. I mean, it's people obviously grow up around it, and that's what they're used to, and it's easy to sort of see the values go up. And I think sort of moving into foreign exchange trading money and sort of moving into that, so it's a whole different beast, different ball game. And there's money to be made there, but I think it's easier to get your head around buying a property, like I say, potentially doing some renovation, seeing the value increase, seeing obviously historically how those property goes up, and it's obviously as property investors ourselves, it's a great asset class.
Oh, absolutely, and for me, it's a generational play. So this portfolio you're building right now, are you building it so you have greater flexibility to do what you want in life, or is it going to be hers one day?
Well, maybe. Yeah. I kind of have an idea of selling a few in about 5 years' time, to tell the truth. And I would like to get more, but I've hit this thing called land tax.
It starts to hurt, doesn't it?
It's horrible.
Yeah.
And the way to see, she's crying. She's heard the word land tax. The way to get out of paying land tax is basically invest outside of New South Wales, which doesn't bother me. I'm not scared to do that. However, I just talked about property managers, and I don't use them. Well, I'm going to have to if I buy in Queensland. Or
so the idea would be sell some of those properties down, avoid the land tax, but then go and reinvest back in property again. You'd stick to the property, but
all that, or kind of hold on to them and pay the land tax, because I'm kind of in a situation where you do something, pay tax; do nothing, pay tax. Yeah,
you've got to pay your tax. It's I'm happy to pay. Look where we live. It's a great nation. Tax is a big component of making sure everyone lives a great life. So but there's some smart ways around paying it. To try and minimise your taxation as much as possible.
We talked about property going up and being a great way of earning money. It's a great way of helping you tax wise. Yeah. It's phenomenal. If I didn't have these properties, or even one, when the tax man came around every year, I wouldn't be nearly as happy. It's a great thing. It's owning a property. The tax benefits are almost as good as money in your pocket.
Are you worried about all this rhetoric at the moment with potentially getting rid of negative gearing?
Well, it won't happen. I don't believe it'll happen. They've talked about it a bit, and I read in the paper that they're saying that you can only up to a certain amount, or they said only a certain amount of properties or something like that. They did do it, is that right, a few years ago in the 80s or something? Or?
The policy ebbs and changes all the time, and it's been an ongoing debate for depending on which government's in place and who the opposition is. It always gets banded around, but the conversations I have around it is that I think there's a fundamental understanding that those incentives available via it has been a big driver to the growth of Australia's sort of property marketplace and the wealth of Australians and their ability in a lot of ways to finance their retirement. So there's a lot of pros and cons for it, and I think it's an issue that's going to continue to be debated. Us as journos, or me as a journo, I'd just like to write about it and comment on it. I don't really like to give my opinion on it because I really want to.
So with you, going back to that point, so with your 6 properties, are they all positively geared? Are they all sort of? Are you tipping anything in along the way?
Yes, the one in Western Sydney cost me a little bit every week, and obviously the one I live in, that cost me as well because it doesn't bring in.
So you own your? So you got a principal place of residence?
Yeah, that's in Manly Vale.
Yep. Okay.
So I live in Manly Vale, and when it all comes down to it, it's better off me owning and cheaper me owning than it is me renting, and renting, say, the same place, which is important, obviously being cheaper, but also, in renting as well, you just never know whether you might get a knock on the door. Oh, excuse me, landlord wants to sell, landlord wants to move in. And with a little baby, I don't want that. I want that security.
That's fair enough. So you got principal place of residence,
Yep.
and then 6 properties, 6 investment
No,
properties?
no, sorry, yeah.
Okay, so it's 5 investment properties
That's
and your
right.
principal place of residence.
Yep.
So taking your principal place of residence out of it, let's chat some numbers around your portfolio. So those 5 other properties.
Yep.
What's their sort of combined value?
Well, it'd probably be about 2.5 mil.
That's impressive.
Yeah,
you know,
that's
what
pretty
you've
good.
built. And what debt are you holding on those properties? So like, what's the LVR are you sort of ranging at?
Oh, that's a good question.
Yeah. Are you tight?
If rates go up, or interest rates go up, or we talked about negative gearing, if the government says, we're going to, Isabella didn't like that.
Yeah.
If the government says, we're going to scrap negative gearing, then I'm just going to sell and get out and take my money and run.
And that's a game plan. So because I know a lot of people when they do invest and it depends where you are on your investment life cycle. You know, when we started investing, we were sort of financing at 90-95%.
Yeah.
And, now we're doing 80s and stuff, and our overall portfolio probably sits at about 70-ish%. So there's a bit of fat there. If rates go up, I can sort of cover the shortfall. I've got the capacity to do so. Whereas it sounds like yourself, you're redlining.
Yeah,
so
definitely.
And you're aware of that, which is good, because a lot of people don't know where they sit. So it's good
all
that
a risk.
you. Yeah,
it's all a risk. Like, it doesn't matter if you invest in property or invest, or start your own business, or you get married and have a baby. Everything's a risk. I've clearly jumped in the deep end, but I don't regret it for a second. I'm going to sink or swim.
So do you reckon if rates go up 1%, 2%, whatever it is, and is it going to happen? The likelihood immediately is not, but it's always good to have a buffer in your serviceability debt. How confident are you that you could go, I've got to sell these, I can get into a lot of trouble here, and shift them quickly? And if you did that, you're going to walk away with money in your back pocket after all your capital gains?
Yes, I will.
Okay.
Yes, I will. I mean, look, I'd buy another place if I could. As I said, there's no better way to get ahead than buying property. It's not too hard to get a place to sell. If it's marketed right and it's priced right, it'll sell. A funny little thing I've got in my portfolio, I've got the studios, so very small inner city studios, and I've also got, say, the big one that I talked about out west. Now, the little studios tend to bring in money every week. What would you call that? You'd call that, not capital gain. Oh, well, pass the baby on. There you go. There you go.
We've got Adam, our producer. Adam, our producer here as well. Adam's got
You've got about 3 minutes, I reckon.
Adam's got a young daughter as well, so he's a dab hand here. He knows what's going on.
Good work, Ad.
So, I felt it would be interesting in this show to talk about the studios. They bring in money every week. For example, the rent is higher than the mortgage and the costs, but they don't go up in regards to capital gain as much. But for example, my Western Sydney property is the opposite. It doesn't bring in money every week, but it has crazy capital gain.
So the money that you're getting from the positively geared, that's paying obviously, running the ones that are negatively.
Yeah, exactly.
Yeah, okay.
Exactly.
Well, that's a really good sort of case in point about diversification in the portfolio, and understanding that some properties are going to produce cash flow.
Yeah.
And some properties are going to some properties are going to produce greater cash flow, not as much capital growth.
That's the word I needed, cash flow. I'm sorry about that.
Whereas other properties are going to be great for capital gains, but the cash flow might not be as great. And I've seen in our portfolio that where I've bought properties have been influenced by where my entire portfolio is at that point in time, where I might be going, I've got to increase my cash flow a little bit because it's cost me a bit of cash.
Buy a studio.
I will buy a particular property that is more cash flow oriented.
Well, I didn't know this when I got these properties. I didn't know this. Maybe I should have, or this or that.
You should be really smart, probably.
Yeah, I know. I know it now, and I wish. I guess in hindsight, I wish I knew it now. But I'm lucky that it turned out for me. But it doesn't turn out for everybody in buying property. I guess I can touch wood. I hope it turns out okay. The next one.
With the stuff that you've bought, if you had your time again, mate, do you think you've been successful? Do you think you've
definitely?
Yeah.
Yeah. There's not many people that are in my position, and I really feel as though I could not have saved this money that my properties have gone up ever. Nobody could have.
How much equity do you reckon you've got now?
Oh, it'd be about 700K or so.
That's impressive.
And how long would it take for you, me, or Isabella here, who's 6 months old, to save 700K?
Yeah.
It'd take a lifetime. So it just comes back to the fact that, you know, there's no better way of earning money than buying property.
So you're making more money property than emceeing and...
Oh, emceeing. You know what? I'll tell you.
How's your rap career? Is it?
that actual performing and putting on shows, I never earned mony. Like it.
You're still out there doing it, though? You're...
No, not. I mean, I wish I could say to you yes, but I'm going to tell you the truth. No,
yeah. We were hoping you had some sort of property rap for us. Ross is going to
I'm sure you could.
I can beatbox.
I'm not going to try that.
Yeah, don't.
It won't sound the same.
Freestyle.
I'm going to want you to come back into the Smart Property Investment Show because I want to keep chatting about stuff. But we're sort of already at 20 minutes and we try and keep these pretty tight.
Yeah, okay.
So, mate, let's get you back in about a week or so's time.
Yeah, sweet.
And I've got some other things I want to chat to you about, particularly what you think you could have done better.
Yeah.
Looking back at your stuff. But also some of your interpretations about the market and some of the principles that are driving your investing. You know, how you see the world. That's really good.
Okay.
So thank you so much for coming in today, mate.
No,
really
it was
good.
great. Thanks.
Russell, thank you.
Mate, no worries. Any time, Phil.
Are you going to come back next time when Julian's here?
Yeah, I've still got a few questions for
Wear your hip-hop clothes,
Zach,
mate.
So, yeah, absolutely.
Hat on sideways and baggy pants.
Sounds good.
Well, thanks for joining us, everyone. Remember to go to smartpropertyinvestment.com.au where you can catch up on all the commentary around the podcasts and some further information as well. We've also got, there's a feature up there as well on Julian from a year or so ago, but let's update that as well, mate. Let's get some of these properties up online and people can check them out and have a look around. 17 square metres, it's tiny. It's about the size of this room, isn't it?
Oh, it's not much bigger than a garage.
Yeah.
The funny thing is too, I've brought people through from overseas. You know, we've got lots of people, say from Europe, French people through, and they say, "Oh, this is quite big compared to Paris apartments." And I'm like, "You're kidding me, right?"
Should charge him more.
So, mate, go and check his portfolio out online. You can follow me on Twitter, where I'm updating what I'm up to in all things property at Philip Tarrant. Remember also to check out all our social networks across Smart Property Investment, Facebook, Twitter, LinkedIn, all and sundry. Thanks again, everyone, for joining us, and we'll see you again soon.